Hello. Hello, my tried and true audience. Today is Tax Tip Tuesday, and it is your girl, B. Valise, with Tried and True Financial Services, where our mission is helping entrepreneurs with the ABCs of finance to simplify your accounting, budgeting, and credit processes. So today I am here before you to share a little bit about what I'm seeing in the tax space, a little bit of information to share with you, just some tips and some nuggets to make sure that you stay safe and that you know what's happening in the realm of taxes. Hello, thanks for joining me for this segment of Tax Tip Tuesday. As always, thank you so much for jumping on. As always, I am not going to be before you long, but make sure that you drop some emojis for me. I love the likes, love the comments, love the shares. Make sure that you comment in the chat. Make sure that you drop me some emojis, some smiley faces, some fire, some fireworks, things like that, just to let me know that you are with me. Today's topic is going to be what you doing. Are you avoiding taxes or are you evading taxes? What's really going on? What you trying to do? All right. So let's talk about it because there is a difference and there is a thin line. And the line is one that I see people crossing. They be crossing the line. They're crossing the line and they don't even realize it and they don't even know it. So that's why I decided to come before you today with this segment of Tax Tip Tuesday to give you some insight because guess what? Believe it or not, I know y'all may not believe it, but as a taxpayer, you have rights. We all have rights. We have rights. The tax code is huge. There's a lot in the tax code. And I know that sometimes it may not seem like it's written in our favor, but there's a lot of things that's written in the tax code for our benefit. And as taxpayers, we have a right to legally avoid paying taxes. I know that might not sound quite right, but it's true. It's the truth. It's the tried and true truth of the matter is that you have a legal right to avoid paying taxes by using the tax code to your advantage. Legitimate and legal ways to get your tax bill lower. That's what you call tax avoidance. Tax avoidance comes by way of tax planning, 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 things that you do in advance. And if you're not familiar with the tax code and you don't know the tax laws, then you want to reach out to your fellow tax professional, enrolled agent, EA, CPA, certified public accountant who specializes in tax and work with them to make sure that you can put some strategies in place to legally minimize and avoid paying a huge tax bill. That's tax avoidance. Now, here's the line, the silver line, the fine line. When you cross the line from avoiding taxes to tax evasion, is when you are not reporting all of your income, when you are making up fictitious or false or fake deductions or credits, misusing credits, making up expenses. As a business owner, you're creating extra expenses that maybe you didn't necessarily pay out of pocket, but you know that there's a tax rule or a tax law in place so you can do it. Because the reality of it is that a lot of the documentation that's necessary to file your tax return does not have to be sent with your tax return. There are some things that need to be sent with your tax return when you send it in, but not all of it. But however, we've talked about it before, and I've shared this with you before, that there is a record retention timeline for how long you should keep certain records. We're not going to get into that today, but generally speaking, after you filed your tax return, there's a statute of limitations that the IRS, once you filed your tax return, you have the IRS has up to 3 years to come back and say something about your tax return or reassess your tax return. However, that's if it was filed accurately and legitimately. But when it comes to tax evasion and the IRS gets wind of or finds out some kind of way that maybe you um, fraudulent, fraudulently submitted a tax return, or that you fraudulently submitted some expenses that you were not entitled to, or that you missed filing some income, they find out some kind of way, there is no statute of limitations. They can come back for as long as they need or want to if a fraudulent return was filed. And that is teetering the line into tax evasion. You don't want to be found guilty of tax evasion, because guess what? Tax evasion is a federal offense that results in a felony. And we don't want any felonies on our records concerning filing a tax return. When you can just go ahead and do the right thing and make sure that you filed your tax return right the first time. You trust me, you don't want that smoke with the IRS. You don't need those kind of problems. There's already so much fear and overwhelm. You will be surprised how stressed out people are when it comes to filing their taxes. And so you definitely don't want to be found to be teetering that line, crossing the line into tax evasion, when the tax code is written for you to be allowed to legally avoid paying taxes. But it is an investment. And if you are not studied and you are not well versed on the tax code, then you want to make sure that you invest in yourself, you invest in your business to make sure that you work with somebody, a trusted advisor, because there's a lot of people out here that's suggesting that people do certain things that they should not be doing. Chanel, you want to know some strategies? That's a broad question. There's so many strategies. One thing that I do recommend that you do is go up on my YouTube channel and check out some previous tax tip Tuesdays, because every week I come to you and I share a tax tip, something that you can do. Mileage. Mileage is a strategy. Vehicle deduction is a strategy. And there's a lot of information out in the world today about how to use your vehicle to write off. But there's so many nuances and there's so many intricate things that goes into a vehicle deduction that you want to make sure that you're speaking to someone specifically about your situation. Yeah, I can throw out, hey, Keela, thanks for joining. So I can throw out that topic as a strategy, but will it work for you in your particular situation? I am a HSA advocate, a health savings account. So I am an advocate as we come up to open enrollment season, where everyone, individuals and business owners alike, will have the opportunity to select their medical plan for the upcoming year. Right, we're heading into open enrollment season, and I am a huge proponent of taking a look at and maybe even selecting a high deductible health plan with an HSA attached to it, because there's so many tax benefits. HSA accounts help reduce your tax liability. That's another strategy. I could rattle off a couple of them, but again, it really just depends on your situation, your unique situation. Maybe an HSA account is conducive for an individual, but maybe a family might not feel like, based on their income, they can contribute the amount to the HSA that they need to cover their high deductible. But again, it's something that you should take a look at. And so again, there's a lot of things: 401k deductions, or contributions, SEP contributions for my business owners, self-employment plans. I am a huge proponent of saving for retirement. So again, those are some additional strategies, but then there's so many different options that again, you want to take a look at your specific situation and figure out what's going to work best for you. How does what work when you're self-employed, Chanel? And when you're self-employed, are you referring to the HSA account? When you're self-employed, you still have to purchase health insurance, right? And so you have the option as well to choose a high deductible health plan. And most high deductible health plans come with a corresponding, yeah. Even as a self-employed individual, when you go look at the health plans that you want to purchase, whether it's through the marketplace or straight out, right? You want to make sure that you ask for all of your options, and you want to look at the high deductible health plan and ask them, is there an HSA attached to this high deductible health plan? And how much can I contribute as a single person or as a family person? A person with a family. So those are some other things that you definitely want to take a look at. But I just want to implore you all to make sure that you're thinking about these things before the end of the year when it's time to file your taxes, because at the end of the year or in April or January or October for my extension filers, no pun intended. This is a no judgment zone. I'm not judging y'all. I'm not judging you. I'm not. I promise you, I'm loving on you. I'm loving on you because I want to help you. I'm here to help you. I want to see you win. But whatever time of the year you decide to file your taxes, one time a year for the previous tax year, by that time it's too late to have an impact or influence on your bottom line. But if you decide that, hey, I'm going to do some pre-planning, some prior planning, so I can make sure that I get my bottom line down to the lowest amount possible. That's where enroll agents, CPAs, tax professionals can share some strategies with you to make sure that you're reducing your tax bill as low as possible. And that is tax avoidance, and it is legal. Tax avoidance is legal. You have a right as a taxpayer to lower your tax bill as much as possible. What you cannot do, and that teeters the line of tax evasion, is make up some deductions because you feel like your tax bill is too high and you don't want to pay all of those taxes. So you make up some deductions. That's tax evasion. Don't make up anything. Or if you decide, hey, I'm not going to claim all of my income because I make too much and I don't want to pay taxes on all of this money. That's really tax evasion, okay? And so you want to make sure that you're dotting all of your I's, you're crossing all of your T's. And if you don't know, make sure that you get with a trusted advisor and get the advice that's specific to you. You cannot go on and just take general random information that you're not sure if it applies specifically to your situation and apply it, because that's one of the misnomers or things that I see happening a lot out here in the marketplace. Is a lot of people are going on and they're doing a whole vehicle deduction, but do you need a vehicle for your line of business? Is that ordinary and necessary? There's a tax code section 162A that says that you can take a deduction that is ordinary and necessary for your line of business. So are all the other CPAs taking this deduction? Are all of the other hairstylists in the industry taking this deduction? Is that ordinary? And is it necessary? Do you really need that? Did you really need to spend that amount of money for that? Is it ordinary and necessary? So those are the types of things you have to take into consideration. And I tell my clients all the time when they come to me with different suggestions or ideals, I need you to tell me what your thought process is. Make it make sense. Because if you can make it make sense and it's ordinary and necessary for you and your business, then it's legitimate. We have a case, we have an argument. Because at the end of the day, you as a taxpayer have the responsibility to be able to explain your deductions. Because if the IRS comes in and say, hey, we want to understand and know where this income number came from, where these expenses came from, do you have the receipts to support it, even if you do have your accounting system in place, because you're doing the right thing out here in these streets these days, and you have an accounting system in place, and you have a bookkeeper, and you're reconciling your accounts at the end of the month. Okay, and you have your profit and loss statement, and you're using your profit and loss statement to generate your tax return or to support your tax return. Understand and know that you still have an obligation to keep up with your receipts. So make sure that you're using the functionalities that's built into these accounting software systems, or whether you have an e-file or electronic storage system, Dropbox or whatever, to make sure that you're keeping track of your receipts. And make sure you write on your receipt who you met with, what the business is, the date and the time, and all of that stuff is going to be on there. But you want to make sure that you write down on there who you met with, what the business purpose was, keep you a spreadsheet, do whatever you need to do. But keeping copious records is very important as a taxpayer, as a business owner, because at the end of the day, God forbid you get the letter in the mail saying that we want to audit you and we want to look at your books and records. You want to make sure that you have all of your documents in place. So make sure that you, as you're reconciling your accounts, that you're uploading those receipts that's pursuant to that transaction, to that to that transaction in your accounting system, so that you have a full record of all of your expenses, the actual transaction that hit your bank account, because your bank statement is not enough to support you in case of an audit. It's not going to be enough. You're going to need the actual receipts. So make sure that you're actually scanning those receipts before the ink wears off, because after so long, the ink wears off of those receipts. So make sure that you're doing your due diligence, you're making your notes on those receipts, and you're scanning those receipts and attaching them to your transactions in your accounting system, so that you have adequate books and records. So when the IRS come for you, if they try to come for you, you all set and you got everything in place. All your I's are dotted, all your T's are crossed, and you are winning in the tax game. All right. So I am here to cheer you on. I want to make sure that you're winning in this space. So make sure that if you have any other questions, thank you so much for Chanel for participating and asking those questions. Make sure that if you have any other questions or concerns or topics that you want to hear me talk about in the future, I'm happy to do that. I'm here to serve you. So make sure that you DM me, you send me an inbox, you send me an email, do whatever you need to do, or feel free to come on one of my lives. I'll be coming before you on Tuesday evenings, right around 7 o'clock for Tax Tip Tuesday, each and every week, to make sure that you are winning in the tax game. Again, it's been your girl, B. Valise, with Tried and True Financial Services, where our mission is to help entrepreneurs with the ABCs of finance to simplify your accounting, budgeting, and credit processes. It's been real. Thanks for hanging out with me today. I'll talk to you all on next week. Have a good night.